Todd Rosenbluth. Europe is certainly a tough place to invest right now, but you're finding funds that are getting over there and finding some values. So I guess you want to buy when there's blood in the streets, right?
Well, for some people, if they're willing to take on a little bit more risk, what we've seen in Europe is a bounce back. So the market was hit quite bad in 2011. The funds that invested there, of course, lost money. In 2012, we've seen actually some of those same funds that took on some risk actually outperforming quite well. And so we think for someone who's willing to take on some risk, looking at what's inside, but there's some good opportunities out there, we think.
Well, if one fund you like is the Federated International Leaders Fund. Let's hear about this one.
Yeah, so this is a fund that is diversified. It's mandated to invest in Europe, Asia, the emerging markets, but about 3/4 of its portfolio is in developed Europe. But and its name, as its name says, it's looking for international leaders. So you're going to find some of these large cap multinational companies that are domiciled in Europe within this portfolio. The fund has underperformed last year, done quite well this year. Good active managed fund that has good exposure to Europe. We like it. So the Federated International Leaders Fund.
You also like the Putnam Europe Equity Fund. Let's hear about this one.
So this is a pure play on Europe. It's got almost 100% of its assets in Europe. The rest, of course, invested in cash. This is going to give you a cleaner way. So there's more volatility, of course. You're not going to get exposure to some of the Asian or Latin American markets, but a good actively managed fund that we like from Putnam that's going to own some of the larger cap companies. It's going to have exposure to some France, to some Germany, some of the United Kingdom, some of the more safer companies that are out there, but still a good investments to take exposure to Europe.
Finally, you like an ETF with the ticker FEZ. This is a SPDR fund, right?
Yeah, this is the SPDR 50, the Euro 50 fund. The ticker is FEZ. So this is a more passively managed portfolio. It's the 50 largest cap companies that are in the Eurozone. So again, you're getting exposure to the Eurozone, but France and Germany are 2/3 of the portfolio, and it's a much cheaper way of playing it. The expense ratio is just 29 basis points. So if cost is a key factor for you, FEZ we think is one way to go, and S&P Capital IQ has an overweight ranking on FEZ.
This market has fewer players.
We're coming into a Monday where we're going
to enter a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.